Hey guys, welcome back. In today's video, we are talking about AMC going to $27, shorts losing control, the swaps expiring, and many more in this video. Firstly, we're taking a look at how the media is trying to push AMC away again. You can take a look at this article from Motley Fool, as always, saying 3 reasons to avoid AMC stock and 1 rival to buy instead. Again, the articles they use to push out to the retail side are always articles to tell you to avoid AMC, to stop buying AMC and to sell all your AMC all together. But then we can take a look at this article, and what you're seeing is AMC is attracting investor attention. Here is what you should know. So firstly, we're always seeing these mixed opinions on AMC. And now that in normal is of course something that is quite common, is something that you will see. But what they tend to do and what they try to do all the time is for the exposure that they have towards retail, they want you to stop buying AMC. They want you to sell your AMC and all in all to ignore AMC and of course put your capital somewhere else. But what we're taking a look at and what we have to actually understand is that institutions are accumulating AMC. When you take a look at what's actually happening for AMC, whether it's retail, whether it's institutions, the ones who understand the value, the opportunities, their potential that is there for AMC, they are all accumulating. And that's why we're seeing these articles saying how AMC is attracting investors. And this isn't me just saying it. When you take a look at all the indicators that it shows you, whether you're looking at OBVs just to understand are people buying shares and are they selling, whether you take a look at the filings about how all of these institutions are increasing their holdings in AMC, you will see that more and more people are buying AMC. And that's ultimately what it is. Yet the news are always telling you to actually avoid AMC when all the big, large institutions are all actually buying AMC instead. You can even take a look here, and this is the auction chain, and now this is telling a very interesting story where a pretty spectacular auction chain Friday, June 20th, when AMC 2 leap option issue along with the ape conversion expire. Essentially what it is that when you take a look at the auction chain for AMC, you'll see that there are a lot of $27 calls, but not even that, it's just that there are a lot of calls right now for AMC that's very, very high, and it's all above, of course, the current market price. We're obviously looking at 313, yet there are options of $27 calls being traded. Now, this isn't to say that 100% AMC is going to $27, but the very fact we're seeing so much interest, the very fact we are seeing people speculating these $27 calls, it obviously highlights their emphasis and what they think will happen to AMC. Now, we have a lot of factors obviously coming in to play right now, but all in all is the fact we're seeing how people realize opportunities, how people understand that there's something happening. And so this is obviously what we have to be aware of. This is what we have to look out for. And it isn't to say, once again, I want to highlight, it isn't to say that it's 100%, going to mean that it's going to $27. But the very fact people are speculating that AMC, in the $27 range, despite the fact AMC is only at $3, it obviously shows that there is something going on. And we've covered recently about how shorts are obviously struggling, about how they're trying to increase their exposure, how they're trying to increase the synthetics and the short pressure. And when all of that comes crumbling down, that's how you'll know we'll see AMC go up. Another reason why AMC going to $27 is fairly easy is to take a look at this. Deeply think about AMC and GME. Market maker is borrowing shares and selling them into retail at different prices. The entire cost average highs and lows plus mids is somewhere in the middle, at the point of control. The borrowing and shorting all of this supply into retail buying to keep prices down. Eventually, at some point, as soon as price gets above that range, they will have huge losses. Their hedges with swaps and options are expiring. It will cost them a lot to hedge again. They can't afford it over time. So this is essentially what we are talking about. And it's very simple to understand about why I said AMC can easily shoot up from $3 to $27. The reason for this is that somewhere along the lines, and we've seen this with the unsettled shares, we talked about how the average is around $8, but even then, What we don't have an exact data on is what are the average price these short sellers have. Some obviously shorted, some have created shares at $8, some at $3, some at $2 range, right? And so we don't know where the average is. But essentially that average is very important, because once we are able to beat that point of control, once we're able to flip above that price, we're going to be seeing a lot of shorts go into losses. And obviously the higher it goes, the bigger the losses they are in. And the bigger the losses, the more shares they will have to cover, the more synthetics are being bought back, and then the price goes up even higher. And so you can obviously see how that's a massive, massive snowball effect. Now, the institutions know this as well, is why they're always trying to stop this from happening. And that's why we're seeing, once again, these articles to tell you to avoid AMC stock, to put your capital somewhere else, because they don't want AMC's price to go to that tipping point. Another thing is about understanding how other institutions are also failing to compress AMC, because Goldman, Citadel, Virtue have too many stocks to short and spoof now. They always leave one or two unattended and they pop off. Eventually, they all run together. When margin calls get too much, keep pressuring. So firstly, the emphasis, one of the emphasizing points is keep pressuring. So you can see how a lot of the things that we can do to beat these shorts is by putting them under a lot of pressure, is by making them struggle for liquidity. And so when you understand that, you see these articles, it makes a lot more sense. And it's why I say every time I see these articles and when I see them increase, it's actually telling me that shorts are all struggling right now. But more on this is talking about how, because they're spoofing, because they're stretched thin with their capital and their liquidity, they sometimes let a few run. It's why you can sometimes see that when we don't get spoofing for AMC, AMC goes up. When we don't get spoofing for GME, GME goes up. Now, most of the times, their main focuses are, of course, on AMC and GME. But you will see times where they struggle to do so, and they keep, they don't keep spoofing one particular stock, and that stock goes up. And we talked about how when we get to a point that it just goes up and it takes off and they struggle even more, that's how it ultimately is going to take off. And it's why we said when AMC squeeze, then GME will squeeze along with it, and vice versa. If GME were to squeeze first, then AMC will squeeze right after, because they will be stretched too thin at that point that they can't actually contain it. Another thing is you can take a look here. About $1.8 billion loss for Anson Fund in less than a year, and they have finally realized that it's time to jump ship, with AUM dropping again to 550 million. So this is a huge fall off over a single year, and it's a direct result of intensifying investigations, scandals, and multitude of lawsuits. So two different things we're looking at here. Firstly, you can see is that these funds aren't doing well. We talked about how it costs us nothing to buy into AMC, and how it costs the shorts everything that to keep creating these synthetics, to keep financing these positions. And that's why we've said it only costs the initial investment of buying AMC shares. After that, there is no more cost. For shorts, it costs them money to put to short AMC, it costs them money to finance the short AMCs, it costs them money to create the synthetics. So it's obviously a very, very stretched out process for these short sellers, and we're seeing how they fail. And you can also see if they get hit with lawsuits, if they can't manipulate market anymore, they seem to lose all of the power. And why is that? Because they are failing to, of course, contain prices of stocks that they are trying to manipulate. Another thing is FTD numbers have been trending down for meme stocks and other retail house stocks the last couple of years. Not because there's been less naked shorting, but because funds have gotten better at resetting FTDs. So one of the biggest things that we've used to notice how they're manipulating AMC, to notice how heavy they're manipulating AMC, is obviously with FTDs, because we understand that they are not settling these positions, hence that they are doing this because they are just creating shares out of nowhere. Now, recently, what we've seen is that the FTD numbers have gone down. And the reason we're seeing this, along with how you're seeing there are more and more shares of AMC available to borrow. Now, the reason for this is because they've gotten better at resetting, right? So it doesn't mean that there are no FTDs. It doesn't mean that they are out of this play. It doesn't mean that they're not shorting AMC anymore. It's because they're getting better at hiding this. They're getting better at exploiting the system, because obviously and clearly we've seen they don't get penalized for it, and when they do, the consequences aren't big enough. And talking about why there are more and more shares available to borrow for the short sellers isn't because they're no longer borrowing shares, right? Because we know they're borrowing shares, we know they're shorting shares, but it's because they've just created so many synthetic shares that there is an abundant amount of the shares. But that itself is not a good thing for the short sellers, because when they have to buy it back, it means that they have to buy back all of these extra shares they've created. But yeah, guys, thanks for watching the video. I'll catch you guys next time.